minutes as everyone joins us. All right. Okay, before we get into our presentation, just a couple of housekeeping items. We have set this up as a Zoom meeting, not a webinar. So we've done that because we have a short presentation on the Giving USA 2025 findings, and then we have reserved some time toward the end for questions and discussion. We do just ask you to please keep yourself on mute during the presentation and utilize the chat function to share your questions. We'll be monitoring that, and any discussion questions we'll bring up at the end. But if there's anything you don't understand or would like clarification on, we'll be seeing those in real time so we can zero in on your question there. And then as we get to the discussion, we'll take the slides down so we can all see each other. And this will be recorded. I'm happy to share that with all of you after the session. We are also releasing a blog post later today, which goes into a bit more detail on the report. So look out for that as well. And I think that's all the housekeeping items. So with that, we are going to get started with our presentation. So by way of introduction, my name is Kate Hughes. I'm the Senior Vice President and Chief Operating Officer at the Angeletti Group. Over the last 14 or so years here, I've had the pleasure of working with so many of our client partners across all different sectors, and I'm really excited to see so many familiar faces on this Zoom joining us today. And then I'll ask my colleagues Cindy and Kevin to introduce themselves briefly.
Great. Morning, everybody. I'm Cindy Albert-Link, and I've been with TAG for about 3.5 years, and before that, about 35 years in development at 3 premier research universities and 1 fantastic performing arts college, Yale, MIT, Princeton, and then the Berklee College of Music in Boston. And like Kate, I'm thrilled to see a number of clients with whom I've worked previously and currently on this call. I expect great questions.
Hi, everyone. Kevin Ralph. I'm a Senior Vice President with the Angeletti Group. I'll echo those sentiments, and a lot of former and current colleagues here on the call, so it's great to be with everyone today. I've been with TAG for the last 7 years, and it's been 28 years now that I've spent in the development field in higher education and healthcare and community and social services as well. So this is always an exciting time of the year to see the prior year's results. I know we always look forward to seeing and hearing what Giving USA has to say. So pleasure to be here with you all for it.
It is one of my favorite times of the year. So just to set the stage of what the Giving USA report is, it's the longest and most comprehensive report on charitable giving in the United States. It's published by the Giving USA Foundation with research and production by the Lilly Family School of Philanthropy at Indiana University. At the Angeletti Group, we are proud to be members of the Giving Institute. So that is what has allowed us to bring you these findings here today. And today we will be looking at figures and data from the year 2024, and we'll be taking a look at the high points, as well as what can we take from the data going forward, and how has 2025 shaped up since we're halfway through the year already. So this is the headline. In 2024, Giving USA reached $592.5 billion. And if you look at the table on the right of the screen, the line going through the middle shows total giving in current dollars, which is what ends right there at that 592 billion mark. The bars show inflation adjusted dollars, and you can see we've not yet surpassed the 2021 high in inflation adjusted dollars that was driven by pandemic response giving. But in both current and inflation adjusted dollars, we are trending higher than in 2019 before the pandemic occurred. So the trend between 2023 and 2024 is pretty similar to the overall 40-year trend, but once again, in current dollars, we've reached the highest amount of philanthropy on record. There are a couple of economic indicators that the Giving USA report focuses on because historically they have been linked to indicators of behavior related to charitable giving. The first is total giving as a percentage of the gross domestic product. And in 2024, that was 2%, which is pretty much what it has been for a number of years, at least since 2012. So we're not seeing much change there. Another economic indicator that the report looks at is individual giving as a share of disposable personal income. This is often really helpful in indicating how households will give. And last year, giving was 1.8% of personal disposable income. Disposable personal income did rise last year by 5.3%. And as you'll see later, this compares with a 8.2% increase in individual giving. So the trend continues. And then, of course, the Standard & Poor's 500 is a great, there's great correlation between the performance of this index and total giving. Corporations and households alike are more likely to give when the market is strong because it's an indicator of financial and economic security. And generally, as we can see in the chart, so in this chart, the dotted gray line represents inflation adjusted dollars total giving, and the yellow orange line represents the growth in the S&P 500. And generally, the rate of growth in giving slightly lags behind the rate of growth of the S&P 500. Last year, in 24, the S&P 500 had a nearly 20% growth, which was great for the economy. It was driven largely by a kind of a boom in tech. And we can see that we've had growth at a similar rate in giving. Now I'm going to ask my colleagues to talk about trends in giving by source, and then we'll also take a look at trends in giving by recipient organizations.
All right, thanks, Kate. We're looking at a high-level overview here of the four big sources that we all are well familiar with, and individuals continue to lead the way as the main source of charitable donations and philanthropy in the country, followed by foundations and bequests and corporations. And we all obviously know the impact that individual giving and the connectivity with bequests and some personal foundation giving as well, which we're going to dive into in a second. But again, wanted you to see a piece of a big picture of the pie and the fact that individuals still continue to dominate, obviously, as the source of contributions. So when we look at trends, you can see the gold bars are 2022, 2023 numbers. On top of the most recent year, this past year, 2024 numbers. And the percentage on the far right of this screen indicates the growth over that consolidated period. But when we look at these broken down by source, we can see that individual giving increased by 5.1%. Bequests did decline slightly by 4.4%. And we continue to see a growth in the corporate giving sector, and we'll get into some more of the inflation factors that Kate mentioned in a bit. But again, we can see, with the exception of bequests, there's been and a slight leveling off on foundations. There was strong growth in individual and corporate giving, which we'll dive into now.
And I just want to address a clarifying question in the chat. It was asked, where do donor advised funds or DAFs fall in the pie chart of giving by source? And the answer is on that chart in giving by source, Donations to donor advised funds is largely going to be seen in the individual slice of the pie. And then donations by donor advised funds are going to be represented in the recipient categories which the donor has chosen to allocate their funds. And we are going to touch on that a little bit later in the presentation.
Into a little more detail. It's tricky.
Yes, and Giving USA does note that there's going to be more detail coming out specifically on donor advised funds as an addendum to this report. So that's something I think for us all to obviously stay tuned to also. So interestingly, we can look here at the at this slide that shows these numbers and the percentage of giving by our four sources over time, going back to 1985. Again, talked about the fact that individuals continue to dominate, but we also now have a steady increase on the foundation side as well. So as we think about individual giving and the vehicles that donors use to conduct their charitable giving through, we have to remember that there's been a greater shift to personal and family foundations over all these decades that we're looking at here. So a way that a donor is expressing themselves might not show up as an individual gift here, but we know that money is still, we're stewarding and treating and cultivating donors as individuals in most of those cases. So looking specifically at individuals, as we noted earlier, as that piece of the pie has declined as an overarching percentage of total giving, dollars are still going up, right? We can still see that there's been an increase in 2024, almost $395 billion of the total was accounted for from individual giving. Factors there, that's again that 5.1% increase due to the strong stock market. Kate mentioned this as well, but the S&P 500 was up 24% last year, and as inflation fell, households were realizing higher real income, thus driving that number back up again higher. Your organizations, many of our peers and colleagues have seen a growth in online and sustainer programs, monthly giving, right? We touched a little bit on the pandemic earlier, but there was a lot of obviously activity that happened virtually during that time period that we all learned lessons from, and that ability to solicit more and to solicit better has certainly helped this number to go back up as well. And we're also seeing stabilization in donor behavior post-pandemic. And I know the end of the pandemic is kind of a moving target in all of our worlds, right? But when there was that increase in, which we'll talk about with foundations as well, while there is that spike in the 2020-21 period, we're leveling back off now and then continuing that upward trend, it seems.
Sorry, I'm trying to move the slide.
No, sorry.
It was frozen for a second, but there we go.
Did we skip foundations or?
Oh, we did. Sorry, it went ahead.
No.
There we go.
So again, we can see that that this foundation number pretty much leveled off, but there has been a lot of you can see obviously by the chart here, dramatic growth in this from this source over the past 15 years. And again, we can attribute at least a portion of that to the fact that more and more individuals are using personal and family foundations as a vehicle to give. But we've also seen strong growth overall in the economy, in the markets, right? Putting more assets and more real dollars in the coffers of foundations and giving them the ability to give. And as I mentioned with individuals also, we saw a real surge during COVID in terms of foundation giving. Even many of whom who were giving up unrestricted operating dollars, right, which normally would not have been the case in many situations. So we're seeing that level off now too. And really next year, the next 2 years, we'll be able to look back on in terms of how the current market and the current economy and financial setting is going to impact, longer term. Right. So, and corporate giving increased 6% year over year, and have seen a really steady increase since going back to 2019 in the space. And although it still holds a smaller percentage of the overall philanthropy pie, an important piece to pay attention to, of course, right? We know that working with corporate foundations and in tandem with marketing opportunities and other sources of potential revenue from any given corporation or business are really important. But this still makes up less than 10% of the sector, right? And we know that going back to the beginning, that individuals are still going to drive our fundraising on a day in and day out basis. But the good news is that corporations have benefited recently, many having record profit years in recent in the last 2 years, and their corporate social and responsibility offices in many cases have become more sophisticated. They've been doing this longer and seeing the real value in supporting the nonprofits, not only in their own communities but nationally as well. So definitely good to see this number on a steady climb. And bequests, again, relatively flat over the past 10 years. This will be an interesting topic to have some discussion on with a group to hear about your own experiences. But we're all hearing about the great wealth transfer that's going to happen, obviously. Still has not kicked in yet, right? We're in the early stages of that. And I would say if we're looking back 5 to 10 years from now, this number is going to look much different or will be much steadier in terms of an increase. But we also know that these numbers can be really variable, just dependent on a handful of mega bequests in any given year over year. But also important to note, and I've heard this from colleagues as well, when we look at bequests, that obviously doesn't tell the whole story in terms of planned giving. So we know that our donors are also choosing other planned giving methods to make gifts now. They want to see gifts made during their lifetimes and see results and achievements. So this isn't a comment on planned giving in general, just specifically about bequests and how donors are using those to fund the nonprofits that they support. And I will now turn this over to Cindy, who's going to talk about the recipient organizations, all of you out there.
Thank you, Kevin. Thank you for summarizing the sources of funds. And yes, now let's turn to recipients. GUSA broke recipients of 2024's $592.5 billion philanthropic total into 10 categories: religion, human services, education, gifts to grant-making foundations, public society benefit, health, international affairs, arts, culture, and humanities, individuals, and then environment and animals. Of these 10, half accounted for 73% of the total pie. Religion at 23%, human services and education tied at 14%, and gifts to grant-making foundations and public society benefit tied at 11%. And I'll talk about those a little more in a few minutes. So turning to the next slide, GUSA provides trends over time for these categories for 40 years, from 1984 to 2024. The bars are cumulative 5-year periods. I know it's hard to read, so I'm going to offer a few key points. During this 40-year period, the percent to religious organizations declined from 56% to 23%, or 33 percentage points, more than half. Very significant. The categories whose percentages consequently increased were human services, which climbed 2.5-fold from 6 to 15%, foundations, which doubled from 6 to 12, public society benefit, which went up from 7 to 10. And I know some questions came in about DAF, so I'm going to touch on this a little bit more now. Notably, the public society benefit is a sector which is influenced by DAFs. GUSA works hard to track this tricky subsector. The lion's share, as Kate said earlier, the lion's share of the source of funds to DAFs is from individuals. As far as the recipient section of the report is concerned, GUSA includes DAF grant recipients in their respective categories. To avoid double counting, GUSA reports the net amount. An example can probably help clarify. So let's say that Jane made a $100,000 contribution to her Fidelity DAF in 2024, and then recommended $40,000 in grants in 2024, which are then reported in the GUSA report in the relevant sectors for the organizations which received her grants. So if she gave to her alma mater, it would be reported in education. If she gave to a church, it would be reported in religion. The net of $60,000 that still remains for her to recommend for grants, that $60,000 remains in her DAF, and that is reported in the public society benefits sector, which includes organizations that have DAFs like Schwab and Fidelity. The other smaller wedges in the pie of recipients increase more marginally, with two exceptions: international affairs and environment animals. Both remain small, and both increased threefold during this period, from 2 to 6% and from 1 to 3%, respectively. So, turning to the next slide, what are our key
Just have
takeaways?
one clarifying question on your example.
I didn't see. Thank you.
Phil Beekman asks, does that mean if Jane makes a grant in subsequent years, it won't be counted in subsequent years?
So the answer to that is part of the tricky part. Yes, the grant will be counted in the recipient organization for the recipient funds, the recipient totals. And indeed, I'm sure the $592.5 billion this year includes grants from DAFs that were sourced in a year prior to 2024. And what happens arithmetically is that Fidelity is giving an end-of-year total for their DAF totals, and the GUSA will only report the net for next year to avoid double counting. I spent a lot of time rereading this explanation because it is tricky. But basically, GUSA is using nets to avoid double counting, and they're reporting the sources of funds are by individuals for the lion's share, and the uses of the recipients of funds are reported in the year of the grant. Okay, turning to the next slide, we have some key takeaways. So as Kevin said, individuals declined as a percentage of the pie, but it's really important to look under the hood, and they remain critical. First, in terms of dollars, the amount of their contributions increased by 5.1% in 2024 versus 23. And secondly, individuals factor into another category for sources of funds, the foundations, which over these 40 years has grown considerably. So we think focusing on building the major gift pipeline is just as important as ever, and we'll keep on talking about that over the next few minutes. We saw corporations as a source increase to 7%, and it's a dramatic increase over the last 10 to 15 years. But while growing, it is still small, and we recommend seeking partnerships for mutual benefit where missions and strategies between your organization and a corporation align, but balance this time and effort with the importance of other priorities to your organization. Bequests have remained relatively flat in absolute dollars and have declined considerably as a percent of the pie. We suggest encouraging plan giving as part of your major gift strategy, and certainly we know that trust and estate attorneys and accountants are also suggesting to their clients, who can be your major gift donors, that they consider planned giving as they complete their estate plans. So it could be synergistic. And a final takeaway pertains to donor priorities. It has always been essential to resonate with your donor pool, and we see that donor interests and priorities are shifting over time. So consider expressing your organization's mission and impact to highlight a category that is emerging as important, impact on society, in order to appeal to donors across generations. And now let me turn it back to Kate, who will look ahead.
Thank you.
Hey, Kate, could I just mention one thing real quick?
Go ahead.
Just in case anyone didn't notice, referring back to Cindy's point on bequests, our colleague Robert Wallers, thanks for chiming in on the planned giving piece. Just to quote him, there is a latency of about 8 years from the time that you confirm your donor's intention in their will or trust until when a deferred gift is realized. Now is the time to invest in encouraging planned gifts so you can increase your revenue from bequests over the next decade. So another actionable item for us to think about. Just wanted to make sure you saw that or heard that directly.
Thanks, Kevin. Before we get into discussion, we're going to touch on some trends that we are seeing in our clients and in the industry on the whole. Now that we're halfway through 2025. And as we were preparing for this discussion, Cindy shared with me an article from this weekend's New York Times that stated, even more than usual, the path ahead isn't clear. Federal Reserve Chair Jerome Powell said, right now it is a forecast in a foggy time, and we are certainly feeling like we are trying to forecast in quite a foggy time. But what we're seeing across the board is the unfortunate fact that there has been a lot of belt tightening. Many households are experiencing reduced disposable income, and we're seeing a sense of caution from donors due to economic pressures, tighter budgets, or perceived challenges down the road that's leading to a lot of uncertainty and might be leading to delays in giving or maybe renewing at levels that don't quite reach what donors had given in the past. And at the same time, as we keep on top of understanding what federal funding could look like in the future. We have a lot of organizations that are shifting away from federal funding and learning, leaning on their individual private donors or foundation support to diversify their revenue stream for federal programs that are either being reduced or going away, or it's just not quite certain yet what's going to happen with those. On the positive side, though, we continue to see the rise of technology and AI tools, not only just for automating tasks or helping to craft communications or engage with donors, but also we're seeing a number of solutions come to the market that offer predictive services, predictive modeling to help understand the potential behavior of prospective investors, donors, and the like. So what we expect that to be a trend that really is here to stay. And then while I wouldn't call this a trend, I think what is how we are coaching many of the organizations we work with is the tried and true. Focusing on those major and planned gifts is always the answer to sustainable fundraising. Building those relationships with individuals, whether they are potential donors themselves, whether they are connectors to other donors or run a foundation or family foundation, that is where the time is best spent and where the money is in that high impact giving. So those are kind of the top of the line trends that we've seen for 2025. We're already eager to see what next year's Giving USA report will say, as we've witnessed, quite a change from the rosier picture that we saw in 2024. But with that concludes our formal presentation, and we wanted to open it up for questions and discussion. If you'd like to speak outside of the chat, feel free to please use the raise hand feature, and then we can make sure we're unmuting one person at a time. And before I take the slides down, if anybody has any questions or wants to contact myself, Kevin, or Cindy, our email addresses are on the screen. Very simple. It's our first name at theangelettigroup.com. We will be sending later today the recording of this session, as well as our new blog post about the Giving USA report.